The MPC was of the view that further calibrated monetary policy is warranted to keep, number 1, inflation expectations anchored, number 2, break core inflation persistence, and number 3, contain second round effects. We will keep Arjuna's eye on the evolving inflation dynamics and be ready to act as may be necessary. Our actions will be nimble and in the best interest of the economy. Now, the Monetary Policy Committee meeting met on 5th, 6th and 7th December. Based on an assessment of the macroeconomic situation and its outlook, the MPC decided by a majority of 5 members out of 6 to increase the policy repo rate by 35 basis points to 6.25% with immediate effect. Now, consequent to this increase in the policy repo rate by 35 basis points, the standing deposit facility, that is the SDF rate, stands adjusted to 6% and the marginal standing facility rate and the bank rate to 6.5%. The MPC also decided by a majority of 4 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. The medium-term inflation outlook is exposed to heightened uncertainties from geopolitical tensions, financial market volatility, and the rising incidence of weather-related disruptions. On balance, the MPC was of the view that further calibrated monetary policy action is warranted to keep inflation expectations anchored, break core inflation persistence, and contain second round effects. The main risk is that core inflation, that is CPI excluding food and fuel, remains sticky and elevated. Overall, CPI price momentum remains high. Risks from adverse weather events add uncertainty to the outlook. Global commodity prices including crude oil have undergone some downward correction, but uncertainty continues to surround the near-term outlook in view of the prolonging of geopolitical hostilities. The outlook for the US dollar and hence imported inflation also remains uncertain. Moreover, the resurgence in domestic services sector activity could also lead to price pressures, especially as firms pass on the input costs. Taking into account these factors and assuming an average crude oil price, that is Indian basket, of $100 per barrel, headline inflation is projected at 6.7% for the current year, with the third quarter at 6.6% and the fourth quarter at 5.9%. The risks are evenly balanced. CPI inflation for the first quarter of next financial year, that is 23-24, is projected at 5%, and the second quarter of next financial year at 5.4% on the assumption of a normal monsoon. Over the next 12 months, inflation is expected to remain higher than 4% target. System liquidity remains in surplus with an average daily absorption under the liquidity adjustment facility, that is LAF, of 1.6 lakh crore in November this year. The real gross domestic product posted a growth of 6.3% year on year in the second quarter of this year, driven primarily by private consumption and investment. This also is in line with our expectations. Going into the third quarter of this year, economic activity continued to gain strength in the month of October. Urban consumption firmed up further, driven by sustained recovery in discretionary spending, especially on services such as travel, tourism and hospitality. Passenger vehicle sales and domestic air passenger traffic posted robust year-on-year growth. Rural demand is recovering as reflected in the pace of tractor and retail two-wheeler sales. With rising farm activity, real GDP growth for the current year, that is 2022-23, is projected at 6.8%, with the Q3 at 4.4% and Q4 at 4.2%. The risks are evenly balanced. Real GDP growth is projected at 7.1% in the first quarter of next financial year, that is 23-24, and 5.9% in the second quarter of the next financial year. On the supply side, the agricultural sector remains resilient. Rabi sowing got off to a strong start. The area sown so far is 6.8% higher than the normal sown area, and this is the position as on 2nd December this year. The manufacturing PMI rose from 55.3 in October to 55.7 in November. The PMI for the services sector also expanded from 55.1 in October to 56.4 in November. Incidentally, both manufacturing and services PMIs for India in November are among the highest in the world. Construction activity is picking up after the end of the southwest monsoon, as indicated by high growth of steel consumption in the month of October. Going ahead, investment activity will get support from government capex. Through this episode of the US dollar appreciation, the Indian rupee's movements have been the least disruptive relative to the peers. In fact, the Indian rupee has appreciated against all other major currencies except a few. Cross-country comparisons of exchange rate movements are often made on inflation adjusted basis, or what is called in real effective terms. On a financial year basis, that is from April this year to October, the Indian rupee has appreciated by 3.2% in real terms, even as several major currencies have depreciated. The story of Indian rupee has been one of India's resilience and stability. FDI flows have remained robust and have risen to $22.7 billion during April to October from $21.3 billion in the corresponding period of last year. Foreign portfolio flows have resumed in recent months and were positive at $11.8 billion during July to 5th December, led by equity flows. The size of forex reserves is comfortable and has also increased. It has gone up from $524.5 billion on 21st October to $561.2 billion as on 2nd December. As we enter 2023, India's G20 presidency provides us a historic opportunity to play a bigger role in the international arena. The theme of our presidency, Vasudhaiva Kutumbakam, that is, the world is one family, reflects our vision of global cooperation for universal welfare. We must remain optimistic and derive inspiration from the words of Gandhiji. I quote, "Let no one think that it is impossible because it is difficult. It is the highest goal, and it is no wonder that the highest effort should be necessary to attain it." Unquote. As the current year ends and a new one awaits, I wish you all a happy new year in advance. Thank you. Namaskar.